Hi guys, it's Sam and welcome back to the UK Mortgage Centre YouTube channel. And if you're new here, hello, nice to see you and I hope you're well today. Now, I'm assuming that you're looking to get your first mortgage. Well, if you are, you've come to the right place because in this video, I'm going to discuss how to get yourself onto the property ladder and how to apply for your first mortgage from the agreement in principle right through to that all-important mortgage offer. And listen, now I've got your attention, why don't you do me a massive favor and get Emma off my back to try and get more subscribers. Click that little button there, it's free, and that way you're never going to miss an upload. We're here on every Monday. Well, Emma makes me try and be here every single Monday. So make sure you subscribe and you don't miss any content. Now I've got the shameless promo out of the way, let's get to it. So it's really important that we get off to a good start. After all, first impressions count, right? Start by collecting your documents. Your mortgage advisor will need as much information as possible to ensure you're going to get the best deal available to your personal circumstances and to make sure the application process, after all, is as stress-free as possible. Now look, we do have a document checklist, shock, Emma made it, and it's free and you can download it by clicking the link in the description. But to give you an idea on the types of initial documents that you need to be thinking about, no matter if you're self-employed or employed, we're going to break them down. So the first thing is proof of identity. This is the easiest thing that you can provide. It's either a driver's license or a passport, and very rarely do I need to ask for a shotgun license anymore. The second thing is proof of residency. Now, most commonly is a bank statement or utility bill to verify that you live at an address. The third thing is the national insurance number. Now, I'm terrible at remembering mine, but you can find it on a wage slip or by accessing your government gateway account. The fourth, proof of income, usually at least 3 months wage slips is what we ask for, along with any proof of additional income, such as like benefits, gifts, overtime, bonuses, that sort of stuff. If you're self-employed though, we'd say that the latest 2 years HMRC tax calculations and overviews are most suited. And if you do have them, the latest set of finalised accounts. But make sure you speak to your accountant, they've probably got them on file and it'll save you loads of headaches. The next thing is proof of deposit and where it came from, whether it's savings or sale of property or gift. And don't forget the current debts as well. You should be keeping a list of all those little rascals that go out on your bank statements, but make sure you get that down, verify what you're spending your money on and collate that data together. The next thing is government income award notices such as child benefit or universal credit and bank statements. Let's be honest, we all forget how to get these now. We can get them on our phone, download them, we don't know what to do. But make sure you get your bank statements, the latest 3 that correspond with the pay slips. Now, it might seem like a lot, and it's important that you do prepare and send over the correct documents to your mortgage advisor. As lenders, they will want this verifying, and they want to make sure the data that we import about the application is correcto mundo. Now, once you have these together, you can send them on to your advisor, and from there, they can start the calculation on how much you can borrow. And you might hear it as something like the borrowing ceiling. Now, in the meantime, you can use affordability calculators online, like the one just on our website. So you can go and get to the exciting part of looking for houses on the likes of Rightmove and Zoopla. Now, your broker at this stage will then probably secure you an agreement in principle or AIP. Hell, there's tons of names for this sort of thing, but it's basically a document that you need to present to an estate agent when making a formal offer on a property. Now, once you've put an offer onto a property, your broker can then start the process of finalising that all-important mortgage application. Now, as part of this process, you'll need to choose your mortgage term. Now, this is the length of time you want to repay the loan to a lender. Now, the questions really are, will it be a shorter mortgage term or will it be a longer mortgage term? And for those fun sponges that usually watch these sorts of videos, we need to remember that the shorter the mortgage term, the higher the monthly repayments will be, but the less interest you're going to pay overall. So the longer the mortgage term, the cheaper the monthly repayment will be, but the overall amount that you pay back to the lenders in the interest is going to be higher. So you need to make sure that the monthly repayments and the mortgage term are within the budget that you can afford. And your advisor is there to guide you through all of these things and help you plan for the future as well what may or may not be and look at your current circumstances now. And your advisor will also recommend a suitable mortgage product too. Now, what I mean by product is, do you want a fixed rate? Do you want interest only, a tracker, discount, offset, cap collar? There's loads of different products. But in most common first-time buyer applications, they opt for what's called a fixed rate mortgage product, which means your monthly repayments will be the same each month as the rate that you pay back is fixed for a set amount of time. Now, I find that most people like probably everybody, like to know what their monthly outgoings are going to be each month. It's really easy to budget and see what you can spend on in the future. Now, I'll leave a link in the description, which is a guide that explains the different types of mortgage repayment types, so you can take a look and see which one you might opt for now or in the future. Now, once your advisor has all that information, they can submit your application to the recommended lender and we can start that all-important underwriting process. Now, the term underwriting, to get dead technical, is a process of evaluating risks so that banks and building societies can reduce risk when making financial decisions in various situations. That's out the way. So a mortgage lender carries out this process to ensure that you and the property are as safe as houses. See what I did there? Did you like that one, Emma? Yeah? Get that? Mm-hmm. The application process can take a little bit of time, but it all depends on the lender, the current market conditions, how long it takes to book a survey and all that sort of stuff. But your advisor will keep you up to date throughout with all the key milestones. So in summary, make sure that you're one step ahead and get all those important personal documents ready. Now, if you like this video, then please do me a favor, give it a thumbs up. And if you have any questions at all in terms of buying a house, affordability, or what to do along the way, then make sure you drop a comment below or give the team a quick call, which is 01925 573 328. See you soon.